So, you hear all this chatter. Is the Michigan real estate market heating up or is it cooling down? The headlines are all over the place, right? But the data, that tells the real story. And that's what we're going to do here. Cut through all that noise and show you what's actually going on.
So, let's just ask it straight up. Is the market hot or not? The answer is yes and also no. Seriously, it's actually doing both at the same time. It all just depends on where you're standing and, what kind of property you're looking at.
The real story, the truth, is hiding in the numbers when you compare this year to last year. And that's exactly what we're going to do. We're going to break it all down. Okay, let's dive in.
All right, first things first, let's start with that big 30,000-foot view. We're talking the grand totals for the entire state. This is kind of like our baseline, what the market looks like on the surface. Okay, before we get too deep, let's just get on the same page with a key term you're going to hear a lot, sold volume. It's pretty simple, really. It's just the total dollar amount of all the real estate sold. Think of it as the size of the market's entire economy. Super important indicator. So, if we look at that total sold volume, you can see the market has definitely grown. We went from $10.7 billion last year to $11.2 billion this year. That's a pretty respectable 4% bump. I mean, it's healthy, for sure, but it's not exactly what you'd call an explosive boom.
And that growth shows up in the average sale price too, which is up 5% across the board. So, if you only looked at these top-line numbers, you'd probably just shrug and think, okay, seems fine. A stable, steadily growing market, right?
But that is not the whole story, not even close. Those big, stable-looking numbers, they're actually hiding some incredibly dramatic, almost wild shifts happening just underneath the surface. So let's start peeling back the layers.
Okay, this is where things get really, really interesting. The Michigan market isn't really one single thing. It's more like a collection of completely different stories, and it all depends on the type of property we're talking about.
Just look at the two biggest residential players. On one side, you've got single-family homes. They're solid. Prices are up 5%, which is right in line with that overall average we just saw. But then you look at condos, and whoa, that market is showing real signs of cooling off. The total sales volume is actually down 4%. See, two totally different worlds.
Now this is fascinating. This visualizes the change in the number of sales, not the price. And look, single-family homes, totally flat, zero change. Condos and manufactured homes are both in the red, down 5 and 10%. But then your eye gets drawn to that last slice, right? The number of farms sold is up a massive 37%. What is going on there?
And this right here, this is our first big clue that something really unusual is happening. The most common type of property, the single-family home, is just treading water. Meanwhile, this one little niche of the market is just absolutely taking off. And hey, if you thought a 37% jump in the number of farms sold sounded like a lot, just wait. Check this out. The total dollar value, that sold volume we talked about, for those farms is up an incredible 75%. That isn't just growth, people. That's an explosion. And it just perfectly shows how different these market segments really are. So, we've established the market is different depending on the property type. But what happens when we start adding geography into the mix? Let's zoom in on some specific counties, because this is where the story goes from interesting to just extreme. We have to start with that wild farm market story. I mean, a 75% statewide increase is already huge, but it's not spread out evenly at all. Some local areas are posting numbers that are honestly hard to even believe.
Case in point, Branch County. The average price for a farm sold there this year is up 503%. Let me just say that again so it sinks in. 503%. No, that is not a typo.
This chart just drives it home. Last year, the average farm sale in Branch County was about $210,000. This year, it's over $1.2 million. It's like a completely different planet, all in just 1 year.
And this crazy hyper-local stuff isn't just happening in the farm market. Remember how we said condos were down overall? Well, not everywhere. In Montcalm County, the condo market is on fire. Sales value is up 84%. But then you go over to Oakland County, one of the biggest markets in the state, and it's the complete opposite. Sales are down a whopping 35%.
So, after wading through all this conflicting data, what's the bottom line? What does this actually mean for you, for someone trying to buy or sell a home in Michigan right now?
Okay, Here's the crucial point, the main takeaway. There isn't one Michigan housing market. There are at least four. You've got the stable, foundational single-family market, you have the cooling condo and manufactured home markets, then there's the wild, booming farm market. And maybe most importantly, any of these can be completely flipped on their head depending on what county you're in.
What this means is, if you're in the market, you absolutely have to look past those big statewide headlines. You need to know the story for your specific type of property in your specific county. Seriously, a person selling a condo in Oakland County and a farmer in Branch County are living in completely different real estate universes right now.
And all of this leaves us with one final, pretty mind-bending question. When you have a market that is stable, cooling, and exploding all at the exact same time, what on earth happens next? The data tells us where we are today, but the road ahead looks anything but simple.